Hey guys, welcome back to the Value Investor Show. Today I want to talk about Fiserv and their 73% drop. The truth about the company and everything you need to know about this stock. So for today I want to cover this stock, dive into the reason behind the skydive, go through the Q3 earnings, insider trading, the fundamentals of the business, what is actually going wrong, what happens next, as well as whether I'm buying or not. But before I do, I want to go through history into my videos. Look at some notable stocks that I have added and bought this year. The first one is Adobe. I started speaking about this company in August and literally it has remained stagnant since then with no movement in the stock whatsoever. However, another company that I have been talking about, which has been United Health, this company became very attractive sub 300 levels and I started buying. I was reporting about it in July and August with an average cost basis of $280. I'm up roughly 30% while gaining significantly from dividend payments. Three of the consumer discretionary spending companies that I have been talking about are LVMH, which I'm up 35% since I started posting about it. This is a company that I had since 2021, but I added more this year due to a very sharp drop. The second one is Deckers. This is the worst performing stock currently in my portfolio. Deckers is down 15 to 20% since I started talking about it, since I started buying, and this is a stock that I'm very optimistic about. I believe in the business, I believe in the management, and still, even at this price point, I will continue to add. The third one is On Running, which has had a roller coaster of a ride, but has had incredible earnings last quarter, which skyrocketed the company up 20%. And finally, another stock that I have been talking about is ASML, which I have been speaking about since July and August, and since my post, since I have invested, the company is up 45%. Now, if you're new here, if you're watching this video, I would love if you could subscribe. It really goes a long way. I'm trying to hit 4,000 subscribers. I put so much time and effort into putting these videos together for free for you guys, so if you can subscribe, it would mean a lot. Also, if you would like to go a further step and want to support the channel, you can do so by becoming a stock picker member. I'm going to release a lot more videos in the future for members only, like how I value my stocks, as well as releasing my stock buys 1 week in advance only for members, and then I will release it to the rest of you guys, as I have done yesterday. I bought a new stock, but I have released this video only for members currently. As always, thank you so much for watching, liking my videos, and let's dive into the rest of this video. So now let's look at Fiserv. The stock has erased its gains of over the last 8 years. The company is now trading at a point that hasn't traded since 2017. In the past 5 years itself, the company is down a staggering 41%. In the past 9 months, the company is down 73% from its all-time high back in February of this year at $235. It's now trading at $64 with a PE ratio of just under 10 and a market cap of 34 billion. This was over 100 billion just a few months ago. So this company has had a huge drop into its stock, into its valuation, and especially there was a massive dive of 45% after the company announced its earnings in late October. Fiserv's stock plummeted 44% following disappointing Q3 earnings, as the company reported weaker than expected results and slashed full-year guidance. Management commentary on elevated debt and consumer dissatisfaction further eroded investor confidence. Shares also fell 7.7% the following day, posting another sharp decline as analysts issue a wave of downgrades and investors reassess the company's prospects, as well as another 4% the day after that. And since then, the company has stayed roughly around $63. For those that don't know, Fiserv is a leading global financial technology and payment solution company serving mainly banks, credit unions, businesses, and retailers. It offers products and services that enable electronic payments, banking operations, merchant acquiring, and point of sale management. Most of their main clients, as I said, are businesses and retailers of banks, credit unions, and financial institutions, as well as insurance and lenders. They have 4 main segments. The first one is Merchant Solutions, which is their Clover system. The second one is their Financial Solutions, their core account processing, digital banking, and payments. The third one is Payments and Network, which is the card issuing, processing, and network payments. and fourth is corporate and other, insurance, lending, investment solution, and corporate services. Now, in terms of the Q3 earnings, here are the terrible facts that have spooked investors massively. Firstly, the company cut its full-year outlook and the CEO acknowledged the firm is underperforming. Secondly, the company reported just 1% organic growth in the third quarter, down sharply from 8% in the second quarter, as well as below the double-digit gains earlier this year. The third one was a growth within their merchant solution segment. Home to Fiserv's Clover payment system slowed to 5%, which was roughly half the pace of the previous quarter. Fourthly, Fiserv now expects 3.5 to 4% organic growth for the full year, down from 10% in the second quarter, and also they have lowered their adjusted EPS forecast for the rest of the year. So overall, a lot of downgrades. The forecasts have been significantly cut down, and also the company has just not performed as well as they were expected. But Fiserv's stock dropped 75% in 2025, and there are a few reasons why, apart from the missed earnings and forecasts which we just talked about. The second one was really the management shakeup. Post Q3 earnings, the company underwent a leadership shakeup, including the appointment of a new CEO and CFO, as well as broad refreshment. The third one was slowing growth in key areas like the merchant solution, the financial solutions, now showing revenue decline for the first time. And the fourth was the loss in investor confidence. Repeated guidance cuts, the operational issues led to a dramatic loss of market confidence, with Fiserv's market capitalization falling over 30 billion in a single day, and the stock basically entering oversold territory. Now, the four biggest reasons behind the slowing growth are: firstly, client attrition. There is a loss of regional community bank clients to competitors due to the dissatisfaction and pricing issues that this company has. The second one is the US market concentration. The company has heavy reliance on the US market, which exposes them to the economic and the consumer spending pressures, which are due to increase as well. We have seen the government shut down. We are seeing less spending pressure within the consumer. So I think this will only exaggerate the problem that the company currently has. The third one is around operational and leadership issues. Management and board changes means changes in strategic discontinuity and investor uncertainty. And finally, competition. There are newer fintechs that are grabbing market share. They're challenging innovation from Fiserv. Now, there have been some buys from hedge funds, most notably David Tepper and Norbert Liu, both Fiserv in Q3, as the 13F filing shows. There's some other hedge funds as well, like Robert Osteen, that have added, and Dodge Cox that have added hugely into their portfolio. But remember, they bought between July and the end of September, before the Q3 earnings disaster. So we won't know if they're still holding the company until the Q4 filings. Also, Fiserv transferred from the New York Stock Exchange to Nasdaq, changing their symbol as well to better align the company with Nasdaq's technology-focused marketplace, which is often viewed as better fit for fintech and innovation-driven firms. In terms of financials, revenues have been growing impressively for this year since 2018 until 2024, which is when the company had probably the biggest percentage change in stock price and market capitalization. The revenue then continued on to 2025, but is now expected to drop. It's expected to decline. And while operating profit has increased, as you can see from the orange bar chart, net income has been reducing, as you can see right here. And that is because due to the very high interest expense. Fiserv is also buying back stock aggressively, especially more so over the last year. It's buying almost 5% of their outstanding shares, and I expect them to continue to do so in the coming months and year ahead. My final thoughts are that while some hedge funds bought into Fiserv, that doesn't mean they haven't sold. I believe that they might have sold because, remember, the 13F filings they submitted just this week were up to the end of September. That means 1 month before the Q3 earnings release. And hedge funds are based on programming, are based on coding. So any massive shifts in the stock price like that most likely have meant a massive sell-off by hedge funds. There are three risks that I see that don't make this company attractive. The first one is high debt leverage, which will continue to pressure profitability. The second one is client attrition. Competitors in the space have increased drastically. The fourth one is macro headwinds. Less spending affects Fiserv. I don't have any Fiserv stock. I don't plan to buy any Fiserv, but I will continue looking into it. Would you guys like me to cover this again in the future? And what other stock would you guys like me to cover next?